Good morning, ladies and gentlemen, and welcome to the show on this Thursday, the 9th of December, 2021. Thank you for tuning in. I'm glad to have you guys here. Now, here's what I want to say, is there's a number of factors that are coming together right now that the market doesn't like. One of the big ones is Evergrande over in China, big property developer. They're getting ready to sink. Another big factor is the Fed is actually wanting to increase the speed of their taper. And we got this Omicron variant that the stock market doesn't like either. There's a number of factors here. Plus, the stimulus that buoyed this market up to where it is now is pretty much wearing out now. It's wearing real thin. And, I timed it back when it first happened, the stimulus, and I said it would be starting to run out around now. And it's all pointing towards some sort of a market shock that could come real quick here, pretty quick here now. Some sort of a downturn, maybe, or maybe you could call it a correction or even a crash, but it's all pointing toward that. Anyway, let's get in there and let's open up the charts right here and take a look at what's going on. Here's one of the big things right here, why I'm thinking that the stock market could be negatively affected or could go through a period of very extreme volatility. Chinese central bank does not want to save Evergrande at any price. The Chinese central bank shows that the ailing real estate giant Evergrande cannot hope for the government money. A payment default is apparently imminent. Now, why this is so important is the Chinese invest like 60-70% of all of their money in property development. Into what's called properties. They all want to own a home, but it's not really homes that they're owning. What they do is they build a big sky-rise building, practically reaches the sky, and they go in there and they subdivide it all into apartments. Many apartments. But in often cases, these apartments are sold before the building is even built. And then they don't, a lot of times, not every time, but a lot of times they don't even finish them inside. Nobody's living in them. They're not even finished. But yet they'll be worth a tremendous amount of money on the books. On the books, they're worth a lot of money as an investment. I know it's strange, but it makes up such a large part of the Chinese economy, it's not even funny. And so when you start to get a property developer like this that fails, there's always a chance that they'll start to sell off some of these properties, and that'll affect the price of the properties in the property sector. So it's like I think it's like $55 trillion the Chinese have got invested in their property sector, in their real estate market. Some of the highest priced real estate in the world. And so as this company goes down, as it takes, property prices could fall, and that would affect that 55 trillion. It might turn it into 45 trillion or something like that. I mean, I'm just guessing numbers, throwing numbers out there, but that'd be a $10 trillion difference. Suddenly, there's spin-over effects into everything, too. If this property developer goes down, they owe over $300 billion. What about that? There's going to be a lot of spillovers. It could carry other property developers down with it. Meanwhile, if this starts to negatively affect the West and our markets, what about the Fed's taper schedule? They're going to taper back on their bond purchases. What about that? This is like a last hurrah for them to try to contain inflation. If it doesn't work, well, I already know it ain't going to work. I think it's a fool's errand. At this point, we're in a stage of the game where they've overinflated everything. They've built up these bubbles, these enormous bubbles of basically it's all debt. And if they let them pop, the whole system pops. Basically, the whole thing just implodes on itself. The only way they can stop that from happening is to create more monetary units and continue to create more monetary units until the money, or what we call money, is actually, we're going to find out it's not really money eventually in the end. But we're going through this whole thing now, this topsy-turvy thing, where up is down and down is up. And when we go down, we're actually going up. And when we go up, we're actually going down. Everything's backwards and upside down. We're in the weirdest period, I think, in human history, where it's the hardest to know which way to go, which way to turn. Anyway, let's take a look at the silver price today, which is down 41 cents, if you can believe that, to $22 even right now. It was one big smackdown right on the New York NYMEX when they opened up, or around in that period of time, So there we go. COMEX opens up and down she goes again. Oh boy, they're good at manipulating that price to the downside, and they just wash, rinse, repeat. Let's take a look at gold today and see what it's doing. Gold is $17.77. It's down $6.20. Now let's take a look at cryptocurrencies and see what they're doing. 2283 right now. Let me refresh the page. 2286. So they're up 3 billion in about the last 15 minutes. 48,676 for Bitcoin right now. It's dropped below a trillion-dollar market cap. It's at 917 billion right now. And now we're going to take a look at the Dow Jones, which is down 3 points on the day, at 35,750. The Dow Jones is proven to be more resilient than gold and silver, more resilient than cryptos, at hanging in there at these higher prices. But it can cascade down awfully fast when it finally does, especially if panic enters the market. Let's take a look now at crude oil at 71.63. It's down 73 cents on the day, or 1%. Now let's take a look at the MOVE index today, which is at 80.29. So it was up getting near 90. Now it's back down to 80.29 again. And we're going to take a look at bonds and rates. Now we're seeing falling yields today, with the exception of the 2-year. Everything else is falling. We're looking at a falling yield of 10 years below 1.5% at 1.492, and the U.S. 30 years at 1.86. We still have an inversion between the U.S. 30-year and the U.S. 20-year of a few basis points. And now let's move on and let's take a look at the U.S. dollar index, which is rising today. It's at 96.32. Topsy-turvy world. I'm afraid next year is not going to be smoother than this year. I think it's going to be a lot worse. But I think there's going to be some really strange twists coming next year. Things that, looking back in retrospect, when the year is over, you're going to say, I should have saw that coming, because everything was in place for it to happen. But then after it happens, you're going to be like, wow, I never expected that. It's going to be that sort of a thing. And I think that, like I said yesterday on that show, toward the end of 2022, moving into 2023, which is a little bit more than a year from now, we're going to see the conclusion of all of this mess. I think that's going to be when what they're calling the reset is going to happen. I'm not exactly sure how that's going to play out, but you just can't transfer all that wealth around in the system to do a reset without it causing havoc, massive collateral damage. As if we haven't had enough damage already, guys. I mean, I mean, absolutely, this has been the craziest time I've ever seen in my life. You know, the last, ever since 2019. You know, I mean, when we had a more or less a normal world, now our world's all turned upside down all the time. We don't know whether we're coming or going. Don't know whether to laugh about it or cry about it. It's like, man, this has been rough the last couple of years. It's been lasting a long time too. Let's and I don't think it's going to get any better until after we go through the final stages of this thing, as it plays itself out. But you know, our ancestors have went through rough periods. Let me tell you, the Spanish flu period was horrible for them, for our ancestors, and the World War One that they had to go through in that same time frame. You know, that was rough. So it's not unheard of to have rough periods, you know, in world history, and we're going through a really rough period right now. Anyway, thank you guys for listening. Like and subscribe. You guys are the greatest. I love my audience out there. I really do. And we'll catch you guys in the next show. Bye-bye.